Welcome back to Alpha Recap. Today we're walking through the market close from earlier. A pretty constructive session. And as always, if you have questions, you can reach us at stockalpha.ai. Ready to dive in?
Absolutely. Lots to unpack from the tape today.
Quick snapshot to kick us off. The S&P 500 ETF closed up about 0.5%, the Nasdaq 100 ETF finished up roughly 0.7%, and the Russell 2000 ETF also climbed about 0.5%. So, a broad-based lift, right?
Yeah, it was broad. Tech led a bit, but materials and industrial real estate were the surprise contributors. The market wasn't driven by a single headline. It was more of a rebalancing across sectors.
So, what really stands out here is the mix of AI-driven tech momentum and a rotation into materials. Tell us about the tech side first.
Sure, the dominant thread was AI and CapEx signals. Companies are talking about running dedicated chips internally and a return to meaningful CapEx in certain pockets. That's kept demand expectations high for semiconductors and the software that supports AI workloads.
Amazon was part of that story today. Say that again. What did Amazon disclose?
And the number that really caught our eye: Amazon said its internal chip unit was operating at about $20 billion on a run rate basis. That's the sort of disclosure that makes people rethink durable enterprise chip spending.
Right. So when a giant like Amazon hints at that level of internal invest, it's a signal for the whole chip complex.
Exactly. It doesn't mean every chipmaker wins, but analysts note it supports demand narratives for chip designers, foundries, and AI software providers. And NXP announcing a conference call added to the chip focus. In this cycle, forward guidance from chip suppliers moves markets because investors are hunting for real demand signals in automotive, industrial, and AI-adjacent segments.
Short reaction? Yeah, absolutely.
On the materials front, we saw renewed interest in critical minerals and mining. Geopolitical supply worries, plus faster clean energy buildouts, have traders nibbling at commodity-sensitive exposure.
And that bled into industrial real estate, right?
Right. Industrial REITs, with logistics and urban industrial exposure, got a lift after some announced deals and wins in New York City. The underlying story is continued demand for space that supports e-commerce and resilient supply chains.
Yeah, that tracks.
On the flip side, the session had a lot of sector-specific noise. Cannabis policy signals and crypto legal headlines created choppy action in those groups. That kept dispersion elevated even while the headline indices moved up. So, it was growth-tilted cyclicals plus large-cap tech. That combination is consistent with a cautiously growth-positive market tone.
Let's run through the sector recap quickly. Just the highlights.
Technology led modestly. AI-related software, cloud services, and semiconductor equipment names were the strongest. Materials and mining were a standout theme, driven by critical minerals narratives. Industrials and real estate were constructive, especially logistics-related REITs. Energy was range-bound, mixed demand signals. Utilities were uneven, with project wins for some, but regulatory and rate pressures for others. Financials showed resilience, but with more dispersion, partly from crypto-related stress. Healthcare was bifurcated, innovative names moving on pipeline news, and others held back by regulatory filings. Cannabis was volatile and lacked a clear direction overall.
Short reaction?
A few notable names and filings were worth watching. Amazon's chip disclosure we already mentioned. NXP's conference call drew attention. BlackBerry filed an 8K and again showed episodic volatility tied to corporate updates. Scott's Miracle-Gro and Colgate-Palmolive also filed 8Ks, which created idiosyncratic moves in consumer names. There were filings from Whitestone REIT and a specialty materials company, USA Rare Earth, that highlighted the split between industrial real estate and specialty materials plays. And a handful of small-cap filings, companies like Invivid, Forte Biosciences, and Zeo Scientifics generated day trading interest.
Interesting mix. Honestly, I was a bit surprised by how many filings showed up in a single day.
Yeah, corporate housekeeping and regulatory updates can create headline risk, especially for less liquid names.
Let's shift to the macro backdrop. What was the Fed and inflation takeaway?
No single macro print dominated the day, with inflation moderating recently, but services inflation still sticky and the labor market resilient. Markets were priced for a patient Fed. Traders are watching upcoming inflation and payroll data, Fed speakers, and minutes because any change in tone could quickly reprice expectations for terminal rates or easing timing.
So the rotation into materials and industrials suggests people were leaning into cyclicality on a modestly improving demand outlook, while keeping large-cap tech for earnings durability where AI exposure exists.
Exactly. It's about balancing growth and cyclicality without abandoning the defensive characteristics of big tech.
Talk to me about technicals and liquidity briefly.
Technically, breadth looked healthy. The major ETFs we mentioned all lifted by roughly mid-single digits in basis points to the high 0.5% range, which implies broad participation. Large-cap liquidity stayed solid, while smaller names were more episodic, with gaps on filings and headline-driven flows.
Quick reaction segment. Short thoughts. Nice breadth today. Little pockets of volatility. Big caps still liquid.
Yep, dispersion remains, so it felt like a market that's constructive but selective.
Before we close, what should listeners watch for next session?
Keep an eye on earnings and conference calls from semiconductors and large-cap tech. NXP and Amazon follow-ups could be catalysts. Economic prints like CPI, PPI, and jobs data, plus any Fed remarks or minutes, will be parsed for policy implications. And sector-specific headlines, especially on cannabis policy and legal developments in crypto, can drive outsized stock-level moves. On the technical side, whether the Russell 2000 ETF keeps pace with the S&P and NASDAQ would indicate broader risk appetite.
Key takeaways then. Let's summarize.
1. The market closed modestly higher with broad participation. The S&P 500 ETF up about 0.5%, the NASDAQ 100 ETF up about 0.7%, and the Russell 2000 ETF also up about 0.5%. 2. AI and CapEx narratives supported tech and semiconductors, anchored by big company disclosures like Amazon's chip run rate. 3. Materials and industrial real estate saw a meaningful rotation on supply chain and clean energy themes. 4. Policy and legal headlines, especially in cannabis and crypto, produced stock-specific volatility and kept dispersion elevated. And 5. The macro backdrop remains delicate. Markets were priced for patience from the Fed, but any shift in inflation or payroll data could change the tone quickly.
Investment reminder and quick legal note. This conversation is for informational purposes only. We're not providing personalized investment advice, and we're not recommending buying, selling, or holding any security. Analysts note the tone was cautiously positive, but sensitive to macro prints and regulatory headlines.
Yeah, always good to restate that. Markets closed up, but the environment can change rapidly.
All right, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next market close.
Thanks for joining. Talk soon.